Hello, monsters. This is Fahad. I am back. I want to take a look at General Dynamics (GD). Now, some of you are probably already positioned in this because we discussed this in the chat room back on March 29th and then again on April 12th, which was last week. And so some of you may already be positioned in this, but I just want to make a point here that I believe this thing is going to post a very strong quarter, and I think you're going to see this break out. So first, quickly on the technicals. So you see how starting from here, this was a double top. This was last year. This was a double top around 152, 153, and then it made a lower high, another lower high, another lower high, another lower high, and then finally it basically now is starting to run. So if I just simply connect the dots from here, here's the trend line. I connect the dots from here, come all the way down here. It finally, after a good 6 to 8 months of downtrend, it broke out, and now it's running. And the volume, when it broke out right here, the volume was not sharply elevated, but it was pretty decent. All right, you have the MACD that is powering higher. You have the RSI that's powering higher. So this is a sweet breakout. To show you differently, here is the chart from stock charts. Same exact technical picture, lower high, lower high, lower high, and then finally broke out. The volume wasn't behind it, but that's the only thing that it's a little bit red flag for me, but that's okay. Volume has been pretty low for the overall market too, and it broke out with RSI powering higher and the MACD powering higher. So what am I seeing over here? Looking at the volume of a price resistance, I think that this power candle that you're seeing, although the volume is light once again, I think you're going to see this gradually move higher all the way to these giant volume of a price resistance bars, which come into play around 140. So currently at 136.28, call it 136.30 and 140, there's still about $4 of move to the upside, which is about 3% of the underlying, and I think that 3% alone is good enough to capture 50 to 100% gain on call options. And so I'm looking for minimum of $4 to upside all the way to 140, but I think if they actually come out with a very good earnings report, which I'm expecting after reading some research reports, I think you're going to see this probably come up to here and then pause, maybe consolidate in a tight bull flag combination for a week or two, and then break out again, and then go all the way up to right here, 146. So you're looking at, starting from 136 to 146, which is your ultimate target, you're looking at 10 points to upside, which is what, about 10%, or sorry, 8% to the upside, and that's pretty good, significant to capture some good gains on call options. So that's what I'm looking at right here. On the option side, this is what catches my attention. So the option activity in General Dynamics has been pretty light, generally speaking. But this is what I noticed. Back on, let me just quickly take my notes. Yeah, back on March 21. So this all started around March 21. See this 4,000? This is November. See this 4,000 open interest in November, 140 calls? They bought 3,000 of these back on March 21. They bought 3,000 of these November 140 calls for $5.20 offer side. Then they returned again. When was that? On March 31st. So March 21st they bought 3,000, and then 10 days later on March 31st they returned again. They bought another 1,000 contracts, also for $5.20. And then today we are seeing a call roll. It's surprising that they're doing call roll rather early because they still have enough time for this. But anyways, they closed 1,500. They closed 1,500 of May 135 calls for $3.50 credit, and then rolled them out to August 140 calls, about 1,500 of these, and they paid about $3.70 to $3.75 for these August 140 calls. So it's a very interesting accumulation in November 140 calls, and today now we have a call roll going from May 135 to August 140. This all started happening is starting from March 21st. So what happened around March? This is what happens, and I showed this in my chat room. If I go here, here is the article from Browder. See, March 28. This all started around March. U.S. names General Dynamics prime contractor for new submarines. Here's the article that I showed. It goes down to say what kind of big contract is 12 new submarines. blah blah. You can read all about this. I provided in my chat room before, or you can just Google it. It's a very large order. Of course, it's not going to be filled anytime soon, but it goes to show that the backlog is increasing, and that's what matters, because that means the visibility is rising. Then after that, I showed a chart from, let's see over here. This came from Bank of America. Now, this is an interesting article. This is what gets my attention. This was this morning, and that's why I'm coming to this stock today. This is April 18. This is an aerospace and defense research note coming out from Bank of America today that is looking at first quarter 26 earnings for a bunch of stocks coming out. It goes on to talk about how defense investment outlays were up 3.6% year over year in March 2016 quarter, which bodes positively for defense contractors' revenues. And then it goes on to say how much the total sales government orders represent the total sales of these companies. We are already long RTN calls. That's 68% of totals of Raytheon calls come from the federal government. For General Dynamics, it's 57%. And then right here it catches my attention. We expect to see an uptick in the sales to the U.S. government from the positive outlays data. Other key topics to watch: defense contracts in our view, the pace of order activity in the Middle East for RTN, particularly from Saudi Arabia due to current oil prices. And then right here is the most important thing as far as General Dynamics is concerned. Expectations for General Dynamics going into the quarter are low, and using the sum of parts valuation, Gulfstream is undervalued at current levels. Now, I don't usually use sum of part valuation because that's sort of basically kind of like twisting the fundamental narrative to arrive at a predetermined conclusion. So I generally don't look at that. But they're basically specifically targeting Gulfstream. So if I just click here, it takes me to the next note from Bank of America, and it's right here. This one was from January 28. And when I read that, it caught my attention because this is what it talks about. The Gulfstream 650 is the most significant driver of General Dynamics earnings growth. We estimate the incremental margin of 30% and the peak rate of 60 aircrafts per year through 2018 and blah blah. And right here, this is the line. The delay in Bombardier's global 7,000, 8,000 aircraft means the Gulfstream remains unchallenged at the high end of ultra-long-range missile. Now, if you guys remember the story last year, the Bombardier had a very big trouble with their production facility that was making the global 7,000, 8,000 aircrafts. And that means a lot of that business went to Gulfstream, which is owned by General Dynamics. And so that's the bull case over here, that they see that the Gulfstream business is kicking into higher gear. It's the most significant driver for General Dynamics earnings growth, and it had the book-to-bill ratio of over 1, which we haven't seen that in a long time. In fourth quarter last year, the General Dynamics closed there with book-to-bill ratio of 1. I mean, it was usually running 0.7, 0.8, and now it's at 1. So it all comes back to, the competitor having problem with their production, and that's helping Gulfstream. So that's the bull case over here. I think the forward earnings estimates are very low. Bank of America later on mentioned that they're raising the forward earnings estimates for the next couple years. If I simply apply the methodology, you're looking at, for example, 2016 and 920 and then 10. I'm just going to go all the way out to 2017. You're looking at a stock that on a forward multiple basis is trading at basically 13.6 times earnings, with the stock at 136. If you compare that to Raytheon, you compare that to Boeing, which is 18 times earnings, you compare that to any other aerospace defense contractor, they're all trading at 16 to 18 times earnings. General Dynamics at 13 times earnings, which makes it cheap. Just a simple multiple expansion, even by one turn, with an earnings power of almost $10 in out years in 2017, which means $10 to the upside. If it were to simply go back to the same peer multiple, you're looking at $30 to $40 to the upside. I'm not even going to go that far out. I'm simply looking for a very short-term move all the way out to 140 first, and my second target would be all the way up here, which is volume over price resistances, up to 146. So, Bottom line is this: the chart, after making series of lower highs, is finally starting to break out. I would like to see more volume, but I think it may happen in coming days. You have a fundamental story that I believe is undervaluing the prospects of Gulfstream, which saw a 1 book-to-bill ratio when it ended Q4, and I think that bodes well going forward. By the way, that's why the stock spiked big time back in January with that 1 book-to-bill ratio. That's why you saw the big sharp spike on high volume, and then it gradually moved out, and then now it's finally breaking out again. And then the last thing on the option market, since March they bought 4,000 of these November 140 calls. That remains an open interest, and then today we are seeing 1,500 contracts being rolled out from May 135 to August 140 strike calls. So how will I play this? I think there's a very simple, easy way to play this. Earnings are going to be coming out in 2 weeks, so they're going to be out on April 27th, before market opens, which is not this week, it's the next week. So you could simply go with May, but in my opinion, I think the better case, just to have on your some time on your side and everything, there are 2 options available that I like both of them, and I'll let you decide. One, you can just buy May in the money calls, which is 135 strike. They're going for 360 to 380. You know, keep in mind the stock at 136.25, and these calls carry a delta of 0.57, so it will not take much to these moves. I mean, they're gonna move neck to neck with the stock more or less. But they're front month. You're trying to capture the earnings that are coming out. You're buying in the money calls with the 57 delta and just looking for a move up to 140, which means these calls will probably go to 5 or 550 when that happens. You're looking at 50% upside in these May 135 calls. Alternately, which is a preferred method in my opinion, is to go out to June and buy June 140 calls. I know this seems slightly too far out of money with the stock at 136, but you're going to spend much less for these. The bid and ask is 205 to 220. You can probably get a fill for 215. These are June 140 calls, and then let the stock run higher. Maybe eventually you can sell. You can buy these for 215 and then sell May 140 calls against it for $1.25, and then end up having a calendar spread, June-May calendar spread for just 90 cents. But then you're going to really sacrifice the delta. So I do not advise doing a calendar spread. There's not a lot of difference in the implied volatility here, both at 17%. The delta that is going to be 0.3 here and 0.35 here, so it's only 0.5 difference, which means the calendar spread is not going to help. My advice is either go buy May in the money 135 calls, or go to June, pay cheaper, and buy June 140 calls for 215 or less. And then basically hold those into earnings coming up, and then look for a move up to 140, and if it breaks out here, all the way to 146. That's it.